WTI oil traded sideways for the week. We have seen it is struggling to break below 76.8 levels, the critical support levels, and on the upside 79.6 proven out to be a great resistance. And we have seen oil closing the week with a dozy at 77.9 levels, while net gas is the one which is traded with massive bullishness. We have seen it moving towards 2.45 levels. We have recommended that net gas is a strong buy and we are looking forward to a rally, and precisely it has stayed bullish. So now what to expect in the coming week from oil and gas? Can we expect oil to continue with the bearish bias and likewise with net gas to continue with the rally, or is it going to reverse? What is going to be our strategy in order to profit trading oil, WTI and natural gas? We will see with the help of charts and indicators. This is the first and weekly review, and I do share daily update for oil and gas, first with the Asia and Europe session, next with the US session. Thus subscribe to the channel and press the bell icon to get the notifications. Join the free Telegram channel for live updates and join the channel memberships here on YouTube to support the effort. Let's start. First oil followed with gas. Watch till the if you look at the 4-hour charts on oil, see after the drop here, it has stayed sideways, traded within a zone, failed to stay beyond 79.6 and on the downside below 77 levels. It has been trading in the zone, and see, most importantly, the closer of the week is towards the bottom. So it suggests that it may give a breakout with the week beginning and might try to trade bearish. So this is one possibility. You should not ignore that when the week opens. And on Monday, we might see oil giving a gap down or continuing to trade with the bearish bias. If you see it is staying below 76.8, certainly more bearishness is going to prevail there. And then I will look forward to 76 and in fact 74 levels very, very soon. But right now it is staying in the box. Let's see which direction it gives a break. Stochastic has come to oversold zone. See MACD after retracing towards the top here, it is now crossing over, and this suggests that it may lead to slight bearishness. RSI has dropped as well. Coming to the daily chart, now look at the daily chart. See, first of all, look at these candles. None of the candles closed below 77.8 levels. This makes it a stronger support level. Second thing is, see, after the drop, retracement, and then this massive fall here. And now when the next week begins, and if it drops below 77.8, which is almost a proximate level and which is also a possibility which is very, very strong, and then we can expect it to continue with the bearish bias from there, taking it towards further lows. So be watchful of this. Oil closing at the bottom is not a good sign. Possibly it is going to continue with the bearish bias, but we have to wait. See what has happened here may replicate again, because this is definitely a very, very good support. Now see, moving averages have crossed over here. These are trading with divergence. Second possibility, you should not ignore that beyond 79.6 we are looking forward to 81. It may try to retrace, but now the moving averages are looking sharply on the downside, suggestive of increasing bearishness here. If you look at see on the daily charts, one more point to note here is, see, oil was trading bullish here. Now it for weeks it has been trading in this bearish channel. It has to come out of this channel. Now on the upside 82 is the level which will confirm the breakout. On the downside we have to see where are the lows right now, at around 76 on the daily charts. And once it breaks out beyond this, it is going to be a stronger fall which can take the prices towards 74 or 72 levels as well. Stochastic rising. Now look at MACD. This is only one good sign that, see, after the rise and forming the double bottom, oil has retraced, shown a good rise here. It has retraced sharply. A sharp fall has been seen. Now if it converges and crosses over, this may lead to increasing bullishness. This is the only possibility which leads to, or which suggests that oil can rise, but remember it is still far above from the lows which it is achieved. Thus possibly one more week of bearishness can be expected, where it can try to move towards 74 before bouncing back towards the end of this month and the last 2 weeks of this month. In my monthly review for oil also, I have mentioned the same, that possibility exists that it can try to show a dip and then a recovery towards the end of the month is what we can look forward to, and a closer towards 78, 79 or in the month of May is going to be a sign of reversal for the month of June. So yes, right now it is still having little room for it to continue on the downside for the coming. RSI is also looking downwards, trying to trade slight bearish. Coming to weekly. Now on the weekly chart, see, after the big bearish candle last week it has stayed in a zone. It has failed to break on the downside. I have mentioned last week as well. See, there are good great support here at 75.876 and 76.877. Now I can see it is forming higher lows and higher highs. Second thing is it has closed the week at a doji, and thus when it opens below the current prices and drops below 77.8, if it drops below 76.8 and 76 levels, consider that we are looking forward to a stronger drop like this. In fact, we can expect it to move towards lower levels as well. But right now, if you ask me, right now it is very much positioned in this bullish channel on the weekly charts. After the drop, forming the double bottom, it has formed a bullish channel and it is very much respecting this channel. So, in sum, it has to break below 76 levels in the coming week in order to confirm further bearishness. Stochastic has come to oversold levels. The MACD, which was trading with bullishness, it is trying to converge. It is not yet crossed over. We have to wait for another candle for it to cross over. RSI has dropped. Coming to monthly. Now look at monthly chart. See, the monthly candle has started on a bearish note. Preceding candle. Now that is why I have mentioned in my monthly review. See, preceding candle closed at a bottom, and the current candle just continued with the momentum it has taken from the preceding month. And now if you look at, if you count the symmetry, it has erased all the gains from this candle. It has come to the lows, and that is what makes this zone at 76 as a very good support zone. We have to be careful. As long as 76 is not taken, do not treat crude oil as bearish. And once it trades below 76, 75.8 is where we can look forward to 74 levels, which are going to be the first support level, and below that a sharper fall can be seen. But if you look at largely, divide this into two, find the double bottom on the monthly charts. See, it has formed a double bottom. It is trying to rise, and it is still very much in the bullish channel. Now remember one more point, that the month has just started couple of few sessions back, and see, it has started on a bearish note, and that is what makes 81 as a critical resistance. If the prices are seen trading above 81, we may see a closer of the month towards 84 as well. Right now we can see there is a downward pull, and it may continue for a while before looking forward to a reversal. If you look at a stochastic, this is rising. The MACD, now this is important. Look at MACD, and this is also a very good sign, suggests that oil has to bounce back sooner or later. Look at the waves here on the MACD, monthly MACD. We have seen it hitting the bottom, and does this also suggest that oil has to converge, oil has to trade bullish, such that these MACD can converge, crossover, and can respect the wave here. This is a very good sign for the forthcoming bulls, which we can see either, if not in this month for May, we can expect this to happen in the month of June. But yes, the bulls are soon going to be there. RSI dropping sharp. So now we have seen the charts, we have seen the indicators, and before I give you the trading levels and strategy, if you want to learn this art of trading, you can be part of my mentorship batch 31st, which is starting on 20th of May. In this batch, we are going to share all the tools, techniques, strategies, and the trade setups which can help you identify the profitable trades and help you trade profitably, be it commodity, currency, crypto, indices, anything. So do not miss this learning journey. Reach out to me for details, as you can be part of my Signals channel where we trade diverse instruments. Thus, subscribe to the channel, join the mentorship batch, and join the Signals channel. Reach out to me via Telegram and email. And those who had asked me to recommend a broker, you can also find the recommended broker link in the channel and video description. Yes, if you join through the link, you'll get the lowest spreads on offer, so that you can save much of your trading capital by having no swap fees, or you can say no hidden charges, and lowest spreads. Thus, join the broker. Now, first, let's talk about the levels. See, if you see oil staying above 78.1, you can initiate a buying entry. But remember, 78.5 is the first resistance. Then we have to wait for it to break beyond 79.2 and then 79.6. Once you see oil staying above 79.6 is where we can look forward to a reversal, and then I will look forward to 80.4 and 81. If at any point of time oil stays above 81, consider that it is reversing. We will look forward to 82.4 and 84 towards the end of the month or the week itself. But I do see that possibly, though the bullishness is, but next week is not going to be the one which is going to bring these bulls out, and thus possibly next week is where we have to be a bit cautious. And if you see it is staying below 77.7, sell here for 77.4, first target 77.4, 77.3. If it stays below this, we can look forward to 76.8, and once the prices drops below 76.8, we can look forward to 76.5. 5 levels at the next and nearest support. Now 76.5, 76 and 75.85. These are the levels which we should watch out for. These are definitely going to remain critical for crude oil in the coming week. If it drops below 75.85, 76 zone, stay bearish. We can look forward to 75 and 74, and this is going to happen rapidly so that it can show a bounce back as well. These are definitely very good support at 74 and 73.5, below which 72 is the next milestone. I do not see that happening, but these are markets you have to be trading with a trailing stop loss, specifically on the downside. The sharper the fall, the greater could be the bounce back. Thus, you should be taking the positions accordingly. Now, let's have a look at natural gas. See, natural gas traded with a strong bullish bias throughout the week. We have seen it hitting 2.45 levels, though we have seen it again coming to take the support from the 20 period moving average. But this also suggests that it's still there is bullishness, though it has come to take the support here. Now, we have to note that, see, it is trading in this bullish channel on the 4-hour charts, and it is very important for net gas to trade below 2.3 levels, which is going to be a very good support. 2.3, 2.28, and then 2.24, 2.2 levels. If these two levels are taken, we can say net gas is reversing, else it is still staying bullish. See, on the 4-hour charts, rise retracement, and then this stronger rise here. Stochastic has dropped to the bottom. Now look at MACD. This is crossed over at the, and it is looking downwards, trading with divergence. This suggests that the bearishness might continue for a while before looking forward to a reversal. So on the 4-hour chart, it appears that the first trading session of the coming week might unleash little bears, where it can try to move towards 2.3, 2.25 levels, and not only the first session but couple of sessions till the time it comes to a comfortable level and bounces back. RSI has come out of the overbought zone, coming to the daily. Look at the daily charts. Moving averages have crossed over here, trading with divergence, staying bullish. Now see, the 50 and 20 period moving averages crossing over after a long time here, and thus this is certainly signs of bullishness. These are very good support levels. Second thing, if you observe, the net gas is still trading in this bullish channel. It has to first drop below 2.3, 2.28 levels, then 2.2 levels. If these two levels are taken, then we can say that the bears might try to take over, and then prices might try to move towards 2.1 levels, which is a very good support for now. The stochastic is overbought. MACD is divergent and bullish. It is still looking upwards. And I have mentioned here, see, MACD on the daily charts, double bottom is seen, and it should move towards the double top levels as well. And thus it suggests that it is still scope for it to rise more. RSI was overbought, trying to come out of the overbought zone here. Coming to weekly. Now look at the weekly charts here. See, after staying with modest bullishness, we have seen net gas giving a breakout last week. Now see, one stronger bullish candle, second bullish candle, it has continued on the upside, but we can also see it has left a little wick on the upside, suggests that the prices were not interested in staying bullish. And look at the bullishness here. See, the candle sizes here and here. The candle sizes, the complete move has also got further diminished. This suggests that the bullish momentum is certainly diminishing here, and thus we have to wait for it to show a strength. And once it stays beyond 2.5 in the coming week, we can look forward to 2.6, and in fact higher levels as well. It can try to deliver similar size of candle. When I say similar size of candle, see, it is started from 1.9598 to almost 2.2122. So if you count 2.25 points of move from here, it is going to move towards 2.6 levels, which is going to be the first target level here. But right now, the last week, if you just observe, certainly the bullishness has got diminished. So we have to be careful. On the downside, 2.2 is going to be one very strong support. Stochastic is rising, showing signs of bullishness. Look at MACD on the weekly charts, crossing over here, trading with divergence, trading bullish, looking upwards. See, after the sharp drop, this is the main trend, this is retracement, and now it is taking again the main trend here, which is of bullish in nature, and thus there is further scope for net gas to rise. Wherever it drops, even if it drops towards 2.1 $2, we certainly gonna look for a rise sooner or later. RSI is rising. Coming to the monthly, look at the monthly charts. What has happened here? Drop here, retracement, lower lows, and thus now what it is trying to do, it is trying to aspire to achieve the top of this channel, which is indeed a bearish channel. So it is a tilted double bottom where we have seen lower lows, and now it is trying to move towards the top of the channel, which is towards 3.2 levels, 3.5 zone. And right now, if you look at This is the, see, after forming a reversal sign, first bullish candle, second bullish candle, and the month of June is going to be the third bullish candle, which is going to take the prices towards $3 levels very, very soon. Stochastic is oversold. MACD has traded with extreme bear for months now, and it is time for it to converge, crossover, and continue with the up move from here. Possibility of a rise in net gas prices exist and exist strong for next few months. Thus, we have to be watchful. The lows which it has seen in the near future, in the recent past, is going to remain the lows for a longer term. That is what I expect. RSI is also rising here. So now we have seen the charts, we have seen the indicators for net gas. Time for me to give you the trading levels and strategies so that you can all trade profitably and comfortably in the coming week. Before I give you the levels, yes, do not miss to join the mentorship batch 31st starting on 20th of May. Register for it and enjoy the learning journey. Else be part of my Signals channel. And those who had asked to recommend a broker is also there in the channel and video description. So all the links are there in the channel and video description. Now first, let's talk about the levels to buy. I will recommend you to buy here at 2.39 levels, where we can expect it to move towards 2.44 first target, and then 2.48, 2.5 at the next target. Now remember, if it stays above this, the next milestone is directly towards 2.6, but it is not going to achieve it in a single candle or a single session. Thus, there are going to be intermittent resistance which you should be watchful of at 2.545, which is going to be first resistance level, and then 2. See, beyond 2.6, actually 2.6 is the ideal resistance. Intermittent resistance doesn't come into picture here. Thus, you have to be careful here. 2.48, 2.5 is the level you should be watching out for, and then 2.55 levels. On the down, I will recommend a sell here at 2.35 levels. Expect it to move towards 2.32, 2.3, now 2.275, 2.25. Now once it drops below 2.25 is where ideally the bears will try to take over, and then I will look forward to 2.2 and 2.1, 2.1 levels. Now remember, I do not see net gas breaking below this, but if it does, this is going to be the level which should not be breached. Now if it is turning bearish and it shows extreme bearish momentum, uh, though I do not expect this to happen, but yes, if it does, it should not break 2.1 levels in any case, because below that slight increasing bearishness will be seen, where it can try to move towards 1.9, which ideally I am not expecting in any case in this month. So you have to be trading with caution. At best, even if it tries to drop, this is going to be a very, very good support zone here. It should not break this zone. Take your positions accordingly. Like, share, subscribe, and comment. Join my mentorship batch, join my Signals channel. Reach out to me for your queries. Do watch the daily updates. Join the free Telegram channel for live market updates and the channel memberships here on YouTube. Thank you very much. Have a great profitable trading day. Thank you. And a profitable week ahead. Thank you.